A friend of mine approached me recently telling me he's about to clear $100,000 Canadian from his Airbnb condo in downtown Toronto. I have to say, I was impressed and a little bit caught by surprise. He took a one plus den, converted it into a two-bedroom, and he's grossing roughly $450 per night, depending on season. So, with that in mind, because it's not something I've researched, I decided to talk to an expert who manages hundreds of units in Canada as well as the US. His name is Alec from Park Place Properties. I'm going to talk to Alec and we're going to deep dive into what is happening with Airbnb in the city of Toronto as well as south of the border. My name is Vas and I'm a real estate broker right here in the city of Toronto where I help investors and families navigate the insanity of our real estate market. Now let's get into the video. I kind of slept on Airbnb for a while. And like when I say for a while, for the last 5-10 years, I was kind of like, I get it. I used it, but I don't really care. I'm the type of guy I want to buy something, put it up for rent and just forget about it. Right.
For sure.
And at the same time, you hear kids like, oh, I'm doing Airbnb arbitrage and all this stuff. And I'm like buzzwords. I'm more like a boomer, right? I'm like sitting back. I'm like, I don't want to deal with this stuff.
Yeah.
And then here's what hit me. I know somebody, smart guy, with a condo downtown, and he shared what he was bringing in with a 1+1 that he converted into a two-bedroom in a really great area. And I almost fell off my foot. Like I couldn't believe it. I'm like,
100%.
you're not bringing $450 a night from this. And yes, he was. So here we are now. So I wanted to pick your brain. And first of all, maybe we'll start off with just tell me a little bit about what Park Place does, how you guys got started. And then I want to talk all things Airbnb, man, especially since COVID. I'm really interested to see how this thing turned around.
For sure. And yeah, I mean, look, a lot of people were sleeping on short-term rentals, which is why we kind of got into the market. Originally, we started off with our own. I mean, I started off with my own properties, my family's properties, et cetera, et cetera. Saw how successful that was. And I'm talking about like 5-6 years ago, right?
And where were these properties, just so I know?
In Toronto. This was in Toronto.
And were these condos or houses?
Condos. They were condos in Toronto. And this is before like you said, nobody was really interested. Everyone was the old mentality. Like my uncle's the same way. I show him the numbers and he's just like, I don't care. I'd rather make my 3% cap on my plaza in North York. You know what I mean? Rather than, 15-20% that you can potentially make. It was that old mentality back then. Now people are kind of getting around to it, and obviously it's becoming a bigger market space. But originally, when I was doing it, the numbers were crazy. So obviously then we started reinvesting into the business, started kind of actually turning it into a business rather than just my own properties, my family's properties. My family's in the hospitality industry, so I had a big network that I had made through that. And people kept hearing, kind of like you heard from your friend, oh my God, like these numbers are crazy you're showing me, et cetera, et cetera. And it kind of just steamrolled from there. Met a few realtors that helped me acquire some clients along the way, reinvested it into marketing, and now we're here, sitting at 400 properties across multiple cities across North America. So that's kind of how we came to be. But yeah, I mean, like you said, I mean, real estate is the best asset class there is, right? There's nothing better than real estate. Obviously, you know that as a realtor. And if you can actually cash flow the way you can through short-term rentals on that asset class, it's a no-brainer. It's a win-win-win-win across multiple different pillars, right? So it's an interesting business, and I'm happy it's got your interest now as well.
I'm waking up, man. I'm waking up. Listen, I'm still not sure if I'm going to do it, but I have some other things I have in my mind that I want to do, but I almost want to do it just to experiment. And because selfishly, I kind of want a place downtown. I already have some stuff downtown, but it's not, I can't do Airbnb.
Yeah.
But I have kind of handpicked a few buildings that I really like. Because here's my biggest risk with Airbnb, or my biggest fear. So how there's a stigma around buying into an Airbnb building, right? Like you're just worried what you're buying yourself into. Are your tenants going to be happy? How are values going to be? ICE condos, you've heard all this stuff, right?
Absolutely.
So that's kind of my biggest risk. But there are a few sleeper buildings, man. And I know, and I don't want to kind of advertise them too much because I don't want them to pop off. But there are sleeper buildings that I do 100%. Like. Yeah, 100%. That I'm kind of thinking about right now.
For sure. I mean, when you talk about the ICE condos, I mean, for sure, your cash on cash, your cap rates, they're all going to be fantastic. But again, real estate has multiple different pillars, right? There's the monthly cash flow that's important, which short-term rentals brings you, but there's also the appreciation that you kind of want to bank on as well. And when you talk about a building like the ICE condos with the stigma behind it and the bad reputation, they just passed a new rule within the building as well, where they charge you 15% with a partnership via Airbnb. The appreciation is not really there, but like you said, there's definitely a handful of buildings in the city that I've personally invested in, and there's some quality upside to them.
So you anybody that's watching this or that's gonna watch this that's not from the Toronto area is not gonna understand our infatuation with appreciation, but you kind of know, man. Most of the money here is made on appreciation, as crazy as it sounds. So that's why for me, I've been always very, very concerned what building I buy. Like, look, even nice condos, as much as people talk badly about them, I've always told people at the end of the day, if it's a really good deal, I will buy nice condos because I don't care. Because if you're buying it below market, whatever market happens to be, who cares? Because at the end of the day, it's just money, right?
Yeah. I mean, I call it the three pillars. It's appreciation, the cash flow, and the debt pay down. Obviously, if you're hitting all three of those things, it's a win-win-win.
And I saw that thing that the condo board at ICE brought in for 15%. Do you think that's a risk for other places to follow suit and do something like that?
I mean, look, when it comes to the ICE condos, they've always kind of done things differently than all the other buildings. Their management is fantastic. Everything they do is great. I think it's actually a good thing because they're going to be able to put more money into the building and the management of the building and controlling some of these unforeseen circumstances on a day-to-day basis. We've actually, as a company, we've had multiple conversations with their property management to implement something similar, maybe not to the scale of 15%, but something similar, because we're in different markets, right? A lot of the management companies or the single hosts in Toronto don't have exposure to what buildings do in Miami or Arizona or LA. We have direct knowledge of that because we're in those markets. So there's a building in Miami, for example, 1200 Brickell Bay, similar to the ICE condos here. I would say about 80% of the building is short-term rentals. They take $50 a reservation for the building, and that building is run seamlessly. Like it's like a hotel. You check in at the front desk, you get the keys at the front desk. Security is amazing. Like the upkeep of the building. Every year there's new hallways, new pool area. Like every year they're always updating something within the building, which is what has actually made that building in Brickell appreciate so much, right? So I think it's actually a good thing. Although right now hosts in the building are kind of freaking out over it. But I think in the long term, it's actually going to help the building. It's going to help the appreciation, and it's going to help the stigma behind the building as well. So I think in the long run, if people right now have tunnel vision of their actual cash flow, but in the long run, they're going to see why it's going to be worthwhile if management uses that money properly.
This is why the American side of things is always fascinating, man, because they kind of set the trend and then we copy. They set the trend and we copy. So we're going to come back to that one in a second because I'm very interested in that one. Let me ask you a question. And here's my conspiracy theory about condos in Toronto. So COVID hit and condos got wrecked appreciation wise, right? Like we took the biggest dump, and somebody pointed this out to me. And this is kind of when I think the city of Toronto brought in the licensing and all that stuff. And I don't know if these numbers are correct, so correct me if I'm wrong here, because I had snippets from AirDNA that were showing like the intelligence and all that stuff. So if I recall correctly, and I saw this data a while back, so I think our total inventory of Airbnbs in the downtown core after the licensing came about dropped something crazy, like 70% possibly. I don't know how accurate that is. So there was this massive drop. And I think that's where people started exiting the Airbnb space, and we got flooded with a bunch of condos. And I think that is what led to the suppression of pricing for condos. That's why they just got crushed. It was obviously a number of things, people moving out of the downtown core, but then this licensing being introduced and then people just selling off their units, because who sells first? It's the investors.
For sure.
So how much truth do you think there is to that? Because the second follow-up question onto that is, I think that is what created the opportunity that we currently have now for the prices that people are getting for their units, because there's just way less competition relative to the past.
For sure, for sure. And I mean there's some validity to what you're saying. I pre-COVID, so 2019 is when the legislation passed, but it wasn't supposed to come into effect until 2021. Obviously 2020 is when COVID hit. So as soon as COVID hit, no short-term rentals allowed. There was nothing you can do. So a lot of people either sold, locked in long-term leases, and we're thinking about 2021, like once COVID's over, I'll get back into the short-term rental market. 2021 came and people started realizing, okay, it's not that easy to get a license, right? It's actually pretty difficult to get the short-term rental license in Toronto. So we went from 22,000 units pre-pandemic for short-term rentals to about 3,800 right now. That was the number I checked last. So yeah, it did drop quite a bit. I would say about 65, 70%. But I mean, 22,000 properties to 3,800 properties in the grand scheme of things in a city like Toronto, where there's 70 cranes at all times building more and more units, it's a drop in the bucket, right? It's not really affecting the actual values of the property. I think it was the more ebbs and flows of COVID that had the effects of the actual real estate. I mean, that it skyrocketed right after, right? It was one of the hottest markets we've ever seen. But when it comes to the actual demand that there is now, it's 100% due to COVID, the licensing, everyone exiting the market, the way the actual real estate market is now. Like I said, we went from 22,000 units, 3,800 in 2 years. How many hotels have been built over the last 2 years? 4, 5. So an extra 500 units, 600 units. So now that people are finally okay to travel again, last summer was great. We were open for after COVID. The city was open. There was events going on. But people were still unsure if they can travel, if they should travel or not, right? So this year is the first year we're noticing that people are 100% okay to travel again. And so the demand is going upwards trajectory. Supply has gone on in a downwards trajectory. So it only makes common sense that the revenues are going to be at an all-time high when it comes to short-term rentals. So definitely, if you have a short-term rental license, you can actually short-term rental. Your building allows for it. You're in good shape. It's going to be a fantastic year. It was great last year as well. This year is actually outperforming last year. So
Okay, that's. But I've heard that getting a license right now, there's a bit of a backlog. Do you know anything about it? It's like 2.5 months or something to get a license,
so
rather
it
than the
depends.
2 weeks.
It depends on how valid your application is. A lot of people out there are trying to, like, finagle the system and have multiple properties or this or that. They catch on. The bylaw office is pretty good with being able to filter who's applying for these things. So if there's any like asterisks beside your application, yeah, it's going to take a little bit longer. But if you're doing it legitimately and you're actually abiding by the rules, it's actually your primary residence, it actually doesn't take too long. It takes about 2-3 weeks to get the license. Otherwise, there's a bit more of a process that goes into it. They give you a call. They want to hear your story, why you want to short-term rent this property, what your scenarios are, and sometimes they even visit the property to see if you
Oh,
actually,
wow.
yeah.
Okay. So now let's get into the fun stuff. I'll ask you first to tell me, if you were to pick, let's say I have no other real estate. I want to get into Airbnb, and I was to pick just randomly between investing in the US, like a Miami, or a Toronto. Just tell me, which one would you park your money in? Which one do you see better profit now and long term?
I mean, look, I'm a huge fan of the US. I'm always gonna go for US real estate or US business over Canada, only because there's no red tape, right? The ease of the barrier of entry is a little bit easier. Real estate's always, real estate is definitely up and down there as well. But when it comes to things like vacation rentals, for example, Toronto's not a vacation market. It's an urban market. If you're thinking about a vacation rental, you're going to go somewhere like Miami. You want to do something like LA. You want to do something like Arizona, where bachelor parties are going to, or a couple's getaway. Nobody's going to a couple's getaway in Toronto. You know what I mean? Most people are coming here for work, and they need a place to stay for work. They want to be next to the convention center, et cetera, et cetera. So 9 times out of 10, I'm going to say the United States, especially for longevity. because they're not outlawing anything there. Here, rules are changing all the time. You always got to do something different to abide by the rules. When you're asking me for my short-term perspective, I would say 100% Toronto, because the next year or two are going to be fantastic. Just because we've been closed for so long, right? And a lot of people, I've even noticed a lot of my friends in England and Europe are now starting to book their trips to Toronto this summer for the first time in 4 years, because they haven't been here for so long. So the next couple of years is going to be fantastic. But long-term perspective, definitely the US. There's more vacation markets there. Although I do love Mont-Tremblant, I love Whistler. Those are excellent markets as well. Anything with, a natural, something natural where it's gonna kind of like a mountain, for example,
like a unique feature.
Feature where you can't just replicate. You can't put a mountain in Toronto. You know what I mean? So something along those lines. In Joshua Tree National Park, right? It's the second most visited national park in the entire United States. Gatlinburg, Tennessee, where the Smoky Mountains are. Whistler, Tremblant. We actually just purchased a property in Tremblant ourselves. It's one of 15 homes in the entire village, right? So it's that barrier of entry is difficult. Nobody can, outside of those 15 homes, nobody can do it because they're all hotels or condos around it, right? So anything that has a unique feature like that, I love. But Toronto, they're all condos. You're not really selling anything different to the next person next to you, right?
So I think there's obviously a big fear of people going to the US because, financing, things are a little bit different. People are they're worried about the unknown. So we'll park that one for a second, but I do want to come back to it because I'm personally interested. It makes sense to me, especially Florida. But let's say I wanted to do Airbnb in Toronto, and I've heard you before talk about numbers, and I've kind of gone through numbers before. I'm just have some notes here. So I remember that a one-bedroom, let's say a one-bedroom in a good building can gross you $6,500 a month. A two-bedroom anywhere between 8 and 12,000, and a three-bedroom like 15. So to me, these numbers are absurd. Like they're just absolutely insane. So I guess the way I want to ask you this question is, I know obviously one perspective when you're trying to do this, you want to find the best deal in a building. So let's say all buildings being equal, I'm just looking for the best purchase. The lower the cost basis, the better, the more buffer I have, right?
For sure.
Assuming all things are equal, if you were to buy, are you looking, and you wanted to do this for the first time, are you looking for a 1+1, a 2, a 3-bedroom? Where is the sweet spot for this? And is there a particular area? Do you want to be close to the Sky Dome and the core? Do you want to be somewhere on University Avenue where maybe it's professionals that are renting? Like, how are you looking at this? Is it from the tourism side, from the professional side, a mix of both? And what size of unit?
A little bit of a mix of both. I like to actually stay right around the Metro Convention Center as much as possible. There's obviously a few buildings around that area that do allow for short-term rentals. I'll tell you why. The convention center has the most events out of any any building in the city, and it's the one that brings in the most travelers. So being close to the convention center is great, but the other positive is that you're next to the Sky Dome, or Rogers Center, you're next to the ACC, or the Scotiabank Arena, and you're next to the CN Tower. So I always try and put myself in a traveler's shoes, right? Most people that are coming to Toronto for the first, second, third time aren't familiar with the area, but everybody in the world knows what the CN Tower is. So if you have a CN Tower view, people are going to know, oh my God, because you're going based off photos, right? It's not like a long-term rental where somebody's going to come in 2-3 times. Do I like the place? Do I not? And sign a lease from there. People are going off that first photo that they see. So if you have a view of the CN Tower, people are going to know right away, I'm in the downtown court. That's where I want to be. That's the hot spot, right? So that's the first thing I kind of look for, being around the Metro Convention Center. When it comes to sizes, I'm a huge fan of the bigger the better, because I keep bringing this up, the barrier of entry, right? Everybody can afford, or not everybody, but most people, because we are talking about Toronto, but most people can afford a 1-bedroom, right? A 2-bedroom gets a little tougher. A 3-bedroom is almost impossible for most people. That being said, when a building first gets released pre-con, I would say 80% of the units in there are 1-bedrooms, 15% are 2-bedrooms, and 5% are 3-bedrooms, right? So there's always less 3-bedrooms and 2-bedrooms available in the market in general, also in short-term rentals, right? So you're offering a product that, again, you can't really replicate. That's why I like The more bedrooms, the better. A 2+ den that you can convert into a 3-bedroom, huge value there, right? Like you said earlier, a 1+1 that you can convert into a 2-bedroom, huge value. I personally, my personal investments, we don't do any 1-bedrooms because it's easy to get into. Everyone does it, and it's the most common property out there. But yeah, that's kind of what
That's
I'm
that's
looking at.
very insightful. And from a 3-bedroom, because it just I can't put myself in the headspace of somebody looking for a 3-bedroom. But who's the, like, I'm just thinking worst case, it's a bunch of guys that want to throw a party and they're gonna have like 20 people in there. Is that, or am I totally off base here? Like, who's renting a 3-bedroom?
Sometimes yes, sometimes no. I mean, look, we just got a 3-bedroom booking for June. I think it was close to 15,000 for 10 nights, right? And it's a family of 6. So it's 3 kids, a mother, and well, a grandmother, and a father and wife. So it could be families. It could definitely be people that are coming, 6 friends coming to Toronto for Caravana weekend. Caravana is always going to be a disaster. TIFF is always going to be a bit of a disaster. Gay Pride's always those special events are always going to have more of those groups that are coming into town to party. If you screen your guests well enough, if you are in a good building where the property management or the front desk security are good at what they do, you kind of avoid a lot of those errors. And what we're seeing now, a trend in Toronto, like I said, that we've seen in Miami for quite some time, is they make every single guest register, not just the main person, not just the main guest coming in, but every single guest. And if any guest is not registered, they won't let them up, right? So you have everyone's name, contact, email, and the main guest's driver's license on file. So it's in their best interest to not trash the property, especially since Airbnb, VRBO, all these different booking platforms have really cracked down on partying. But like I said, more often than not, it could be families. More often than not, it could just be 2, 3, travelers. For example, for TIFF, two movie producers are coming into town, or 3 actors are coming to town, and they just want to split the place, right? So not often do we see the places completely trashed. Does happen for sure. Disclaimer, it definitely happens. But it's not as common as you might think.
You know what? I was gonna save this question till the end, but since we're talking about trashed places, man, I have to ask because this is probably my favorite. So what's your definition of trashed? Just curious, because you see stuff. I'm just wondering, what's your definition of
I mean,
bad?
look, the worst we've actually seen it is during COVID, because we were only allowed to rent out short monthlies during COVID.
Mm.
And if someone's staying in your property for a month and they're not taking care of it, it builds up, right? So worst I've seen it is like, the couch being broken, nothing major, but like just trash everywhere, right? Like garbage bins that are garbage bags that were never taken out for months. You go in, it absolutely stinks. Nothing that's a permanent damage.
Okay.
But those the 2, 3, 4 day guests that come in and party for 3, 4 days are not as bad as the ones that come in for a month and
Mm.
just don't even throw out a single thing for the entire month. It's
Okay. Okay. Got. Yeah. My thing was that you mentioned it. I was wondering about permanent damage, like, holes in the drywall and stuff, because it's like that's kind of like what I'm expecting. But not that it's the end of the world. It's not a big deal. But
We've seen those. We've definitely,
yeah.
definitely seen those. But like I said, with vacation rentals, I mean, you're earning the money. You got to know that it comes with a disclaimer that things like that will happen. The benefit of us is that we take care of all of that before your next guest comes in, and more often than not, we do get it covered by some of the OTAs. VRBO's insurance policy is great. Airbnb's is great. Booking.com we're on now as well. Marriott, Hopper, and we have our own insurance policy that we've kind of put in for those OTAs because they don't offer one. So more often than not, you're covered. But those are minor fixes. Those are the
Yeah.
easy stuff. The hard ones are when you can't get a stench out before the next guest comes in 2 hours. You know what I mean?
Oof. Yeah. That's a problem.
Yeah.
All right. So I think that does a pretty good job of Toronto, man. I find that actually pretty insightful. what I like about the 3 bedrooms too is they're tough to sell. So that's where you can quote unquote get a deal, right? Like you can squeeze on price a little bit better or
For
more.
sure.
So talk to me about Miami. I mean, I guess the way I want to understand it is I know the cash on cash returns are better. I know that they're all about freedom and all that stuff, kind of like you do as you gotta, as you please. I'm trying to understand, like, what is the biggest hesitation for people trying to invest there? I guess I know it's the fear of the unknown. Is it financing? Is it just not knowing where to invest? They don't know the people like you to kind of make the recommendation. What is it?
For sure. I guess a little bit of everything. I think the main concern, not even a fear, but the main concern is that it's very hard as a foreign investor to get financing. They want 35% down now, and your interest rate is about 9-10%. Like if you were talking to me about a year and a half or 2 years ago when we did so we bought two properties as well in Brickell. We try and buy a property in every city that we're in just so we can um that's kind of how we start up a market as well. But we got two in Brickell. Our interest rate was about 4.89%. And at the time, we thought it was high, but in hindsight, it's a fantastic deal. You're locked in for 30 years, nothing's changing, so you're good. I think it was 25% at the time. Now it's gone up to 35% and 9% interest rate. So it's hard, right? It's hard to kind of make ends meet at 9-10%. For sure. The cash on cash is way higher, the cap rates are way higher. But it still eats into your profit. So a lot of people kind of do the analysis and they're like, okay, I might as well buy something in Toronto because I'm going to net the same because the interest rate is cheaper here, the down payment is cheaper here. And it's my backyard. I feel safer. I can check up on the property whenever I want. Buying somewhere like Florida or Arizona, it's hard to kind of, I mean, it's 2.5 hour to 4 hour flight. But still, you got to fly somewhere to kind of check up on the property, right? So there's a few unknowns there for sure. But I think the biggest hurdle is getting the financing. BMO and TD have released programs for cross-border banking or cross-border mortgages, that is. It is a very slow process. I've been trying to go through it for a while as well, but I kind of gave up on it. I found a different company that I'm going to be using, and I'm actually getting my social security number now. So hopefully I can start getting mortgages down there with as a resident rather than a foreign investor. But that I would say is definitely the biggest hurdle.
Yeah, okay. So because I know a couple of people who've done different things, not necessarily Airbnb, and it's the Canadian way, or like everybody pulls the HELOC and that's how they finance it, but sometimes it's not sufficient to cover whatever, 500 million plus USD property, right?
Yeah.
Yeah, okay. So 35% down and you're looking at a pretty decent interest rate. So can you just give me a comparison? So for example, if I took a look at a 3 bedroom building in downtown Toronto, let's say right now, I'm going to pull a number out of my rear. So let's call it 900K. And I'm
Well,
getting,
I have a perfect comparable for you because there
okay,
was
do it
one
for me for Miami and for Toronto for like something like that. I just want to see the numbers high level.
Yeah. So high level, a property just sold down here that I was looking at for 1,050,000, three
Okay.
bedroom, in a short-term rental friendly building. Um, the 3 bedroom prices have gone up for
Yeah.
short-term rentals. So for the summer 6 months, you're going to be making around 18 to 20K a month, or generating about 18 to 20K a month in revenue. But then in the wintertime, you're looking at 4,000, 4,500 because you're going to be renting it out on a monthly basis. So you're averaging out around, say, 10,000, 12,500 across the year, average,
Okay.
on a monthly basis. You're looking at Miami, you can get a 3 bedroom for about 900K USD. So about, say, 1.2 Canadian, but you're getting a way larger property as well. You're a 3 bedroom here, that the one that I'm talking about that sold was 860 square feet for a three
Oh,
bedroom.
wow.
A 3 bedroom there is about 1,500 square feet, right? So about double the size. And the units that I'm talking about in Miami are in Brickell, which is one of the most up and coming areas, I would say, in the entire United States. And it's appreciating like crazy. Of course, we're still talking about Miami. It could bottom out tomorrow and be worth nothing. But Miami's been in a very upward trajectory over the last, I would say, 5 to 8 years, even prior to COVID. the migration there from New York, Chicago, California, just because of the taxes and everything, has actually been on the positive, and then obviously COVID sped it up. But there you're looking at, in the winter months, you're looking at, March, our three bedrooms just did. March is the busiest time of the year, but our three bedrooms were doing anywhere between 20 to 22K USD. And summertime you slow down a bit. You're hovering around like 8 to 10K, but your average is definitely going to be higher. Your average, because you can short-term rent across the entire year as well, right? So your average is going to be closer to 15K USD. So a little bit more higher of a purchase price, but your revenues are definitely going to be a little bit higher as well.
Okay, so without doing too much math, public math, because I don't want to embarrass myself, it kind of seems to me like we're squeezing at margins here. Like we're not. I guess what I'm trying to figure out is like we're not talking orders of magnitude more profitable to do it in Miami if you do a proper Toronto play with a 3 bedroom in the right building and all the stars align, right?
Very
Whereas in
similar.
Miami, you can probably get the similar peak Toronto result, but you can get it in Miami probably much easier. It
That's
seems to
the only
me.
thing. The revenues are going to be not so different. Your cash on cash. It has balanced out a little bit because the numbers I'm talking about now are current numbers, right? The
Yeah.
last 2 years in Miami were fantastic,
Mm.
but nowhere else in the world was open. So everyone kind of got overexposed to Miami as well. Now that it's kind of going back to regular seasonality, like the prices were 3 years ago, versus Toronto, where nobody was exposed to it for 2 years. And now everyone's kind of flooding back into the market, right? So it's kind of balanced out a little bit for sure. The only difference is what type of investor are you, right? So we have clients that spend every dollar that they make, and then when the winter time comes, they haven't saved anything from the summertime to cover some of their costs, right? In Miami, you're going to get an even keel all year round. You're always covering your costs. You're always making a little bit on top. Obviously, in the wintertime, you make a lot more on top. Summertime, you make a little bit on top. Here, more often than not, you're cash flow negative in the winter, but you're making so much in the summer that it offsets for that. At the end of the year, your averages are going to be about the same. It's just what type of investor are you, right? If you're keeping everything in the account and then looking at it on a yearly basis rather than on a month by month basis. So yeah, there's it's the other thing is the ease of getting the license and renting it out short term, et cetera, et cetera. So yeah, different types of markets, but at the end of the day, the numbers are not too far off.
Okay, so on the Miami front, because we started with a 3 bedroom that's super expensive, right? Like over $1 million too. And I think for most people, that's going to be scary to go into the US and drop that type of money on an Airbnb, especially, right? You're
For
in a
sure.
different space. This is your kind of like your backyard. But what about at lower end properties? Like I don't have the context. Like, I mean, when I think Florida, I think cheap, but I know that Miami, just like Toronto, like you can't compare Toronto to like Penetanguishene in Ontario. Like
For
it's just
sure.
different things. So Miami is its own little thing. Is
For
there an Airbnb play that's cheaper entry, but still yields great results? That's not Miami. Maybe at 500 or a little bit less USD.
Yeah, 100%. I mean, look, Scottsdale is a market where the price per square foot is super low, only because it's such a large desert, right? And there's endless amounts of land. If you're looking at anything around Scottsdale, not too many buildings there that you can short-term rent in, but mostly homes. Um, you can buy a home for $600,000 there, right? And actually, they're more preferred. A lot of people like the tiny home styles there. It's kind of like an upwards trend that's been going on on the West Coast. Same thing with Coachella Valley. Same thing with Joshua Tree. A lot of these tiny homes are becoming more and more popular if you furnish it right or if you design it right. So you can buy a house for like anywhere between 5 to 600,000, even less if you want. And they still do pretty well. You on a 5 or 600,000 dollar home, of course, it has to have a swimming pool. It is the desert after
Yeah,
all.
yeah, yeah.
You can generate. I mean, in the winter months, you're generating anywhere between 6 to 8 thousand a month. Summer months do get a lot hotter. It's one of the hottest places in the United States in the summertime. But you're still covering your costs. You can make it at least 2,000, 2,500 a month. So definitely a cheaper play. The margins are obviously slimmer, but there's definitely some money to be made there.
Okay, that's I have a couple of friends that own homes in Arizona, but this is before any of this stuff became popular. These are guys that kind of like it's like a second house. I think that's where they go in the winter because they don't want to do the
Yeah.
Florida. You know how people are split. Like you have the guys that go to Florida, then you have the guys that go to California or
Yeah.
Arizona. My dad actually lives in California, so I go
Oh,
there
nice.
every year. I actually went, so I was there last year. I was in South California, and the night before my flight back, so I have a family, right? Like I have two little kids. I
Nice.
decided, I told my wife, you know what? We were in Oceanside, which is like a little surfer town just on the way to San Diego.
Yep.
And I'm like, you know what? On the way back, let's rent a really nice place. Like, let's go to one of these like Instagram worthy places with the infinity pool and all this stuff. And I went on Airbnb. I'm like, listen, let's just pick something. Like, let's just splurge. And then I saw
Yeah.
the prices, and I'm like, you know what? No infinity pool. It's like 10 grand a night, man. I'm like, okay, this is
Yeah.
insane. So
California is definitely the prices are up there, but the purchase price is also,
yeah.
it's hard to look at a price tag like that.
So what we ended up doing, I still spent a ton of money. I'm honestly embarrassed to tell you how much I spent, but so we found a place in Malibu. So it was Verbo or no, it was Airbnb. So in Malibu, the way it works is you have these mansions. So you have these mansions on the hills. But what I didn't realize is that these mansions have guest houses. The
Yeah.
guest houses are better than the houses that we live in here, but they
Yeah.
share the amenities with everything. So, for example, the guest house we stayed in, I checked it on Zillow. It was like an $8 million estate home, like on 1.5 acres. But you have your own private gate that you drive up in, and you
Yeah.
come in, and the place was just amazing. And dude, it was $1,100 a night US.
Yeah. Yeah.
But
Yeah.
they had a maid at the main house, and that maid came and took care of this thing too. And then you have access to their pool. You just have to like book it,
It's
and
amazing.
that's how they roll. And I'm like, holy smoke. So I talked to the owner, and they're like, yeah, man, like we don't use the guest house for anything. In fact, the guest house was above their 3 or 4 car garage. So
Right.
because they're all on hills, they park underneath, but they never see
Yeah.
me because I'm in a completely different part of
You're
the
you're
estate.
on top. Yep.
Yeah. And wow, he's like, yeah, man, we just make like, 10, 15 grand a month. I was like, all right, I found that pretty fascinating with these like guest houses. I was wondering like that's got to be a sick way to do it here, but with guest houses are not that common in the GTA, at least not that I know of.
So obviously no guest houses because we don't have the land to kind of put
Yeah.
up that large. Laneway houses are a thing. We do manage a few of those. But again, it comes down to licensing, right?
Ah, that's right.
It's hard to get a license if it's not actually zoned as a laneway home because then you got to get the license on your actual home and then it becomes a little complicated. So it all that's why I was referring to the US when you asked me Canada or US. You can do whatever you want there. It's fair play. Even in California, there are rules and regulations that are stricter than Scottsdale, Vegas, Miami, but they still allow you to rent it out all year round, right? You have to have in LA, you have to have an LA driver's license with the property address on it. And they first give you 90 days. If you have no blemishes, they give you 180 days. If you have no blemishes on your record, they give you the entire 365 days out of the year. So they've controlled it for sure, but not to the extent of you have 180 days. You can only do it one time, and you have to live in the property for part time of the year, right? And you have to pay a 6% MAT tax on top of that.
Oh, wow.
So definitely a lot more controlled here. But LA is a fantastic market. I mean, Palm Springs is one of my favorite markets out there. It's the playground of the rich and famous, right? It's about 2 hours away from LA. Biggest corporate retreats get thrown in Palm Springs. A lot of events. Coachella's, down the street. We actually went to Palm Springs not too long ago. I would say about 2 years ago. And we were there to kind of research the market, and the house we were staying in, we met the owner. I wanted to meet the builder of the house because we were thinking about making a play like that. He told me that the upcoming Coachella, he had the house we were staying in rented out for 55,000 a night, which is
A
crazy.
night.
So
Oh,
he had it
wow.
rented out for 4 nights for 220,000 USD.
Holy smokes. I guess
So
that covers pretty much your whole year.
your whole year is taken care of. He built the house for 4.5 million.
Wow. Wow.
So
That's
it was,
wild.
yeah.
Okay, so in terms of next steps for you, I guess by the sounds of it, you're expanding in both Canada and in the US, but you seem to be more US focused, or kind of like you're going where the money is going.
We're definitely more US focused. I mean, look, like I said, there's definitely markets that we love in Canada. Tremblant is one of my favorite markets. Believe it or not, Blue Mountain is one of my favorite markets because there's only 300 licenses issued in Blue Mountain, and they're not issuing another license, period. So to get a license, you have to basically purchase a property that has the license already intact and grandfathered in. So if you can get your hands on one of those, you're gold. It's gold. It's Blue Mountain is a playground of Toronto, right? Kind of like the Muskokas in the summertime, but Blue Mountain is all year round. 10 months out of the year, you're busy. Summertime is actually busier than the winter time there. So I love markets like that. Tremblant, very similar. You have kayaking, mountain biking, mountain climbing, some of the top golf in Canada. So the summertime is actually incredibly busy as well. So I love markets that are 10 months out of the year. You're never going to get 12 out of 12.
Yeah.
But so I do love Canadian markets. The mountainous areas are phenomenal because you get 10 months usually. Wintertime's busy, summertime's busy. But our main focus is the US. We've actually expanded into a couple new cities. We just expanded into Vegas, South Carolina, Columbia, and Dallas. But we have a couple of Canadian markets on here as well, right? We have Ottawa, Gatineau, we have Calgary. So we're still going to expand in Canada. There's still definitely a market here. I think the US is just, I mean, it's the real estate there is incredible, right?
Well,
So
this is anybody in Canada, I think, always once you get a taste of the US, it's like you're like, what am I doing here? It's very difficult here. We're not going to sugarcoat it. So what I like about what you're doing is that you're obviously building your teams in every single place you go, because that's the best way. Like you said, you go and buy a property because that's kind of like how you figure it out. So in terms of the services you offer, kind of walk me through that. Like, who is this service for? So for example, somebody watching this, if I'm thinking about buying a place in Florida, are you then basically, I got to find somebody to help me find the place down there? That's number one. And I don't know, maybe you help with that. And then number two, who's going to be my PM, or who's going to kind of manage this whole thing so that I can close my eyes and hopefully just collect my check and
yeah.
then not worry about anything. So kind of walk me through who's your customer, who's usually reaching out to you, and at what phase or at what stage should they start reaching out to you?
Yeah, I mean, people can reach out to us right off the jump. So what we do before we start marketing in a certain market, what we do is we first try and find, or we always have to find a property manager that we trust and we can work well with. Because at the end of the day, our clients are giving us their keys to their $600,000, $1 million property, their biggest asset, right? So we want to make sure that the person that we have running the market is completely responsible and trustworthy as well. So first we find somebody to manage the market and manage the properties alongside of us. And then based off that person, we start making their relationships, right? Because usually we're finding a property manager that's already managing or a short-term rental host that's already managing 3 or 4 of their own properties. And we go to them like, hey, look at what we did in this market. We grew Florida to 150 properties. We can grow your market to 150 properties. You're currently managing 3 of your own homes. We're going to blow you up. So we make a relationship like that, somebody who already has experience in the industry. And through that, you get their contact for their cleaners, their maintenance staff, and of course their realtors as well. So somebody can contact us right off the bat. We're in most markets that we're in, we have very reputable builders, designers, et cetera, et cetera. So if you're looking for a place in Miami, we'd put you in touch with our realtor or a few realtors, because we have a bigger network in Miami than most of the other cities. Or a few of our designers as well to help set up the property, furnish the property, et cetera, et cetera. Once that's all complete, we take everything over from A to Z. The guest communication, the check-in, the checkout, the revenue management, the actual financials, where we send you a statement every month breaking down every single reservation, every single cost associated, et cetera, et cetera. Of course, we have client management as well. So we create a WhatsApp group with our clients just to make them feel comfortable that they have access to us 24 hours of the day. Someone's always covering that inbox to make sure that anytime there's a question, we're there to answer it. Any maintenance, any cleaning, we take everything over. So for the clients, it's like having a long-term tenant in there where they don't have to do anything, but obviously with the short-term rental income. Of course, we invite our clients to our platforms as well, where they can see everything that we can see. They see the calendar, they see each and every guest, how much the reservation was booked for, what platform it was booked on, just to give them the transparency and the ease of that they're handing over their biggest asset to us. You know what I mean?
Okay, so basically, if I want to start an Airbnb or I want to dabble in it in the US, I can basically come to you from beginning to end. It's like, okay, you're going to refer me from the realtor to tell me right down to what areas, buildings, and all that stuff. In Toronto, I'm assuming you can do the same thing. And then here, I'm assuming most of it is actually just the management. Once I've given you the keys, all I'm getting from you is like, here's my, like, in my perfect world, I'm getting the statement of how much I'm making, hopefully not losing, but I understand obviously there's going to be months where it's not going to be profitable, and that's kind of it. And then you guys take care of everything in between, because the biggest thing, the biggest hurdle for me is like, okay, unless you own a number of doors as an investor, you have to PM yourself. Like, and I'm talking about long-term rentals, right? Like, because you just don't have the money to afford 8 or 9 or 12% to pay somebody to clip a fee because the margins are so small. But with Airbnb, it's different. So for one, the cash is more, but obviously the turnover is more. So I can't be going down to like cleaning and like, I mean, I could, but it's just not a good use of my time, right? So
there's that aspect for sure, but there's also the aspect that we have a full revenue management team, but also the experience. But lastly, we've built our own internal algorithm where if you're going to do it yourself, a lot of people want to do it themselves, but you're never going to make as much money as us because there's certain things that we look at, right? Like we're tied in with the Metro Convention Center calendar, right? And we know which events are going to generate the most money. Most single unit hosts are going to go there, put 200, they're going to look at their neighbor's unit. They're going to put $250 across the board and then maybe 400 on the weekends, right? When we know, okay, Caravana can earn you 2,200. A lot of people know about the major events. Don't get me wrong, Caravana, Gay Pride, Canada Day, but it's the smaller events that have a big impact. When Metro Convention Center Room A and B are both rented together, we have that information, and we know that's going to be a 4,000 person event, right? That they're going to need accommodations for in and around that area. So it always ends up being more lucrative even after paying our property management commission.
That's very interesting. I didn't know you were price optimizing like that. That's actually a really good selling point because you're effectively, because if you're acting as the hotel, you can always price optimize relative to everybody else. And then also it probably works on the way down because maybe when it's worth dropping your price just to get the occupancy rather than sit empty with the potential when the probability of getting booked for the next X amount of days is very low. So you might as well take whatever you can. That's really interesting, actually. Huh. Yeah, that's good, man.
For all markets as well. It's not just in Toronto. We verse ourselves pretty well on all events in all markets that we're in.
Man, see, I gotta start thinking about this Airbnb soon enough, man. Soon enough.
We got you. We're here for you.
Yeah, this is good. So this is great, man. Thanks. I learned a lot. I think, again, it's just getting over the boomer mentality, man. I have this mentality of like, no, I want to do it, just set it and forget it. But it just, as you know, right now it doesn't make money, especially like in 2020. I was so busy with like buying and some of my clients got some amazing deals on condos and they're cash flowing and all that stuff. Like it was great. The internal rate of return was like high teens, beautiful. In the last year, I haven't bought a single investor condo. Like it's been all end users because nothing makes sense, man. The numbers are like, they're just awful. So, but the Airbnb stuff makes sense because of the lack of competition.
And when you talk about, the boomer mentality,
I'm like your uncle. I'm like your uncle, bro. That's me.
A lot of people have a romantic relationship with their properties that they own, right? Like, for example, this is the property that we got in Tremblant. I mean, it's a stunning home.
Oh wow. Yeah, that's beautiful.
Be ready in April of 2023. It's stunning. Like it's immaculate. It's going to be brand new, never before lived in. It's a pre-con. I don't care if there's 50 people in that house throwing a complete rager, as long as they're paying me $3,500 to $4,500 a night. You know what I mean? Because I know that whatever damage happens, I'm going to be able to collect it back, fix it, like nothing happened. But a lot of people are very like, oh, like I got a scratch on the wall, I'm not going to be happy. Or if I get a a stain on the marble, we're not going to be happy. But that's why you're making those big returns, right? Because you're putting your property out there, right? So you just got to get into that hotel investor mentality where I legit don't care if there's 50 people in this house throwing a party, because I know that I'm going to charge each and every single one of those people a premium to be having that party, right? I mean,
That's
I'm not saying
right
it to
on.
that scale, but I just mean you can't get tied in with your property and be like, oh, this is the most special property. I don't want anyone, it's an investment property. At the end of the day, you got to just set it and forget it and just make your money. That's it.
That is so true. But you know what you've done there? What you've done that some people still struggle. And, I was probably a late bloomer to it. You have to switch from, this is not about your property. This is just a business, right? That's all it is. I had a conversation with somebody recently, because another thing on Florida that I've a little bit of a tangent that I've kind of started looking into is Section 8 housing. It seems very appealing to me. If I'm going to own something down there that's remote and I'm going to have the headaches, maybe go for where I think you might be able to get the best cash on cash. Again, I don't know, but it's also kind of steady. But the one thing, I spoke to somebody that tried doing it and they're still doing it, but their biggest complaint is that they couldn't trust their property manager because, a fridge would go missing and all this stuff. And I'm like, dude, just budget like 5 fridges going missing a year. Who cares? If that's your biggest cost, like $5,000 in missing fridges and stoves and microwaves, I think that's pretty good. But it's the switch of mentality, because he's thinking about it, well, they're stealing from me, right?
Yeah.
And obviously it kind of hurts with the trust. But I think the good thing about the US is that there's a lot of competition. So finding a PM, it's not like here, right? Like you got to go word of mouth or whatever. There's competition here too, and there's some guys that have a good portion of the market. But in the US, I feel it's like the market will create itself. If there's demand for a trustworthy guy or gal will emerge one way or another. So it's much more problem solvable. So that's what I found very interesting about.
And even talking about competition, right? It just brings up another point in my mind where you asked me Canada or US. I actually don't like ruling out either of them, because the big American investors are focused on America. They don't want to touch Canada. They don't care about Canada. So it's like there are markets here where it is fun and easy and profitable because the big boys don't play here, right? So it's always good to just, my rule of thumb is balance out your portfolio. You have a property somewhere where it's hot in the summertime. You have a property somewhere where it's hot in the wintertime. That way, all year round, you're just making money and it's easy. Of course, it's easier said than done because not a lot of people can get into 2 or 3 properties at once, but you just build, right? You slowly build a solid portfolio. I never like putting all my eggs in one basket. That's the one rule that I have. COVID hits, one property is going to get shot. The other one's going to go through the roof. You know what I mean?
Yeah.
So, that's the one thing that I learned through COVID. But so I don't like ruling out Canada. So maybe I misspoke earlier by saying US right away. But the big boys don't play here. A lot less competition. You just got to find the good market.